Good evening, I'm Mike Knetter, and welcome to the UW Now Livestream series, where we talk about timely and important topics. Cryptocurrencies are all the rage right now, rising in price against traditional currencies, attracting celebrity investors, and now being used to sell digital artworks, including those from North Fond du Lac, Wisconsin native, formerly known as Mike Winkleman. That's right, Beeple is from Wisconsin, in case you didn't know. Are cryptocurrencies best thought of as speculative assets or actual money? Will they eclipse central bank fiat currencies at some point? Or will central banks launch their own digital currencies? Joining us tonight are two experts from the UW community who will discuss the future of money and crypto's place. Brad Chandler is the director of the Nicholas Center for Corporate Finance and Investment Banking at the Wisconsin School of Business. And Dana Peterson, master's in economics from UW, is now chief economist at the Conference Board. Thank you both for making time to be here. It's really a pleasure to host you on our show, and I know our alumni audience is going to be really interested to hear your perspective on this important topic. Our first speaker tonight is Brad Chandler. As director of the Nicholas Center, he launched UW's first course on cryptocurrencies and also teaches courses on financial modeling and valuation and applied corporate finance. He advises a number of student groups, including the Graduate Finance Organization, the Investment Banking Club, and Badger Blockchain. Prior to joining the Nicholas Center, Brad was a managing director in the investment banking division at Morgan Stanley, where he advised corporate and private equity clients on mergers and acquisitions, debt and equity financings, restructurings, and fund level financings. Brad received his JD and MBA degrees from the University of Chicago and a BA in public policy from Duke, but he finally found his way to a great public university, and we couldn't be happier. So Brad, thanks for joining us tonight, and give us your rundown on what cryptocurrencies are and where we're going.
Great. Thank you, Mike. I appreciate it. I'm excited to be here. Thanks for having me. So this is a topic that we've studied on campus now for over 3 years. We launched our course many, many years ago. We've had students, faculty, and others thinking about this topic for many, many years. And one thing I want to say just as we start out is I encourage everyone to lean in and learn more, because I believe that in society, we're going to have to make a decision. We're going to have to decide in what ways are these cryptocurrencies going to move forward? How are we going to regulate them? And I think you and we, the collective we, will play a big part in that. Either through consumer adoption, will we really use these and make them more a part of our daily life? Or through the political process, will we elect leaders that want to regulate these cryptocurrencies or not? And so I encourage you to think and learn, because this is a really important topic that affects many people outside of the limited world of cryptocurrencies. And maybe with that, I have a few slides that I would walk through. This topic is so big and it's unruly in a lot of ways. You have to have a plan of attack. So our plan of attack tonight, let's talk about the origin story of cryptocurrencies, make sure we understand that. Let's do a quick review of the basics, because there might be people that have joined in this call that need a bit of a refresher on that. And then importantly, let's talk about where we are now. And my thesis where we are now is that cryptocurrencies are having an accelerating impact on society. And then let's talk about where could we go. I don't have any special crystal ball, but let's talk about some possible path forward in an uncertain future. And with that, next slide, please. So the origin, where do these come from? And what I want you to understand is that this is currency innovation, and just think about that for a minute. Currency innovation, that's not something that many generations have seen, frankly, through the years. A new type of money that has been created, and I would say from an unlikely source. This is not from any government, but it's from the bottom up. It's from a set of developers that came out of a cyberpunk community. And in 2009, they created Bitcoin. So remember, it's only 12 years old. This is still a young technology, but very much came out of this view that We would rather place our trust in programs and algorithms and rules that are strictly enforced than in a central authority that may make choices that are different depending on the circumstance. And you can see, I just highlight a picture here. This is the Genesis block of Bitcoin, and embedded right there in the code is a reference to the bailouts in the Great Financial Crisis. And what Bitcoin did when it arrived in 2009 and a number of years later is that it spurred an unprecedented experimentation, competition all of a sudden in forms of money and digital assets, and ultimately consumer choice. So innovation is a good thing. Innovation leads to choices. Sometimes innovation needs to be regulated, of course, but there is a really good positive impact that these currencies have had on the way that central banks may work or going to continue to work, and just on society in general from this innovation. And today there's more than 7,500 digital assets in the world. So this has created really just something new. Next slide, please. And before we get into our comments, let's review some of the basics. I want you to think about digital assets as a really large, broad asset class now. And it's, one that has emerged in the last, 5 to 7 years. Cryptocurrencies, that is digital assets that are trying to be money, they're one part of this digital asset, but they're only one piece. There are many other digital assets out there, whether it's for specific use, whether it's digital collectibles like the NFTs that from Next slide. So what are cryptocurrencies? Let's talk about just the basics here. Well, they're a digital asset. That means they exist on computers, on servers, on connected devices like the internet. They do not exist in any way in the physical world. They are seeking to become a new form of money. They're not backed by any government or central authority. They're often not backed by any real assets. There's no gold or silver or any other commodity underneath them that are backing their value. And they often utilize blockchain technology. We're not going to get into blockchain in depth today, but just think of it as a simple database that's set up to record transactions. And think of it as different than normal databases in that there is no central authority that tells you what the database says. It's through a protocol, through software. People connect many different computers, and those computers all decide together what the database says. Next slide. And as you are designing the protocol, this new software that's going to run these new forms of money, there are a lot of design choices that have to be built in. And let's go through two of the biggest. So Bitcoin, we all know, Bitcoin today is $1 trillion market cap. So think of it as equivalent to, say, an Apple, equivalent to the market cap of Apple. And that represents about 60% of all digital assets today. Ethereum at a close second, but still only 1/5 of the value. But these two collectively are about 75% of all digital assets. But they've made very different choices in their design protocol. Well, I mentioned just a few here, but on the blockchain, so both use blockchain. Both are public, meaning anyone can come on, anyone can transact, anyone can join the system. Bitcoin is famously a single use meaning it is trying to be currency and trying to be simply a record of the transaction of who owns Bitcoin. That's it. Very focused. Ethereum is the flip side. It's multi-use. Ethereum, on the Ethereum blockchain, you can do anything that a computer could do, you can do on the public blockchain. And so it's thought of as multi-use. You may have heard, smart contracts, the idea of programming more technology into money and having things automate in a way that doesn't require human intervention. This is what the promise of Ethereum really is. On the supply, so when this currency is coming out, what is the supply of the currency? Another critical design choice. Bitcoin famously has a fixed supply. There will only ever be 21 million Bitcoin in existence, according to the current protocol. And that drives a lot of things we'll talk about in a minute. Whereas Ethereum, there is no set limit. It continues to increase over time as there are mining activities that happen. And then lastly, transaction throughput, just to think about how many transactions can these systems really process in a given period of time. Bitcoin, 3 to 7 transactions a second. Ethereum a bit better at 12 to 16. But really, if you think about something like a MasterCard, which is doing thousands of transactions a second, these are pretty slow. And really, they're not optimized to be the most efficient payment processing. They have a different purpose. Next slide. So what are the pros and cons just at a high level? One, they are alternative to government currencies. That could be important for some people, not important to others. They may have built-in scarcity value, and in a world where central bank and monetary policy is increasingly easing, something that has scarcity value is unique in the world. It's also accessible to anyone with an internet connection. You don't have to have a bank account or to be a banking customer of a large financial institution to use any of these cryptocurrencies. And they're platforms where other developers and other enthusiasts can build on top of. So Ethereum, we'll talk about decentralized finance in a minute, but an entire ecosystem can be built on top of things like Ethereum. On the con side, the problems, we have to face these very clearly, is price volatility. In some ways, we've never seen assets that have the volatility over time that these cryptocurrencies have. We're at a point in time now where there's positive volatility. We're primarily going up, but we've seen many boom and bust cycles over the short history that they've been in existence. They also do not have a proven long-term track record. As I mentioned, they're only, Bitcoin's only 12 years old, really only been trading, say, for 5 or 7 years. We don't really know how they perform in a variety of different environments, or how they are, for some person like me that really likes to think about correlations and quantitative analysis around these, we really don't know. They're also operating in an opaque market. So these markets are not exactly the same way that we think about our securities market. I'll give you one example. Tether is a stable coin. A stable coin is just something that tries to keep its value at $1. And every time there are new Tether that are created, they buy Bitcoin. And so in this market, you have this automatic buying power through this other cryptocurrency that may be influencing the price of this in the long term. And so again, there's this really opaque, not very transparent market. And then lastly, a con is, as we try to use this in real life, in the real economy, as we try to use it as what's called a medium of exchange, or just simply to use as a payment, there are a lot of issues, whether it's transaction speed, like I mentioned before, or the volatility in prices that make these assets really difficult to use as a medium of exchange. Next slide, please. So where are we today, now that we've done the basics? Well, Bitcoin is at over $50,000 per Bitcoin. That's an all-time high. We've never. And institutions are really jumping back in. They were in a few years ago, and they're jumping back in. I have a list here, and it's a pretty impressive list. So Goldman Sachs is reopening their cryptocurrency desk. Companies like Tesla, MicroStrategy, Square are buying Bitcoin just for their own balance sheets. PayPal allows you now to deposit crypto and get cash. Coinbase, one of the key companies in this area, has filed to go public and is expecting to do a $100 billion IPO. You have investment funds like Grayscale that allow investors to get exposure through a fund to Bitcoin. MasterCard will now start processing cryptocurrencies. There's a futures market that has been in existence now for a number of years. There was most recently $1 trillion traded on that futures market in December 2020. And so the list kind of goes on and on. And now there's also this new emerging, over the last couple of years, decentralized finance, which is really being built on top of Ethereum. And these are experimentations. This is all about experimentations in decentralized exchanges. Can we have an exchange where everything is decentralized? Stable coins, lending, services that might be provided by traditional financial sector. Can we do them in a decentralized fashion? And there's been a really big uptick in activity there. There's now over $71 billion in market cap on decentralized finance products. So it's becoming more prevalent. And then lastly, you have now some Bitcoin enthusiasts who have, purchased their Bitcoin at 1,000 or even less than that now have a lot of wealth, and they're going to be positive spillover effects from that wealth for them trying to bring this new vision of money into existence even further. So they're reinvesting money into more and more applications, more and more development in this area. They're doing things like purchasing NFTs for $60 million because, hey, when you're a Bitcoin billionaire, that's chump change at this point. So again, this is having a very pronounced accelerating impact on a lot of things. Next slide. And so why are they now back in favor when 18 months ago they were not? It's really about the digital gold thesis. The digital gold thesis is that cryptocurrencies, especially Bitcoin, will hold their value and will be hedged against currency devaluation. So government currencies, people have seen unprecedented amounts of quantitative easing and issuance by governments. And there's this idea that cryptocurrencies, because of some of the built-in scarcity value, will be an effective hedge there. There's also speculation. Anytime you have an asset class that goes up from 10,000 to 50,000, you're going to have a lot of people that are searching for easy, outsized returns. And lastly, money as a social construct. Money is something where we exchange with others when we believe it is worth it to exchange. So there's a powerful community dynamic. There is a really rabid, enthusiast population here that really believes in Bitcoin and believes that this, and Ethereum too, that they're going to be the future. And that is buying Bitcoin is as much an expression of your community beliefs and where you see the future as it is a financial investment. And what's it not? Let's just be clear on this. Cryptos are not back in favor because of widespread acceptance. There's not widespread acceptance. It's still very much in the domain of enthusiasts. It's not because of digitization. Our money, your money, is already 90% digitized today. And it's not about efficiency. It's not about creating a better payment system. They're already very, very effective. Next slide, please. And so another thing that this has created, this, say, competition in currency, has led central banks to consider their own digital currencies. China is really leading the way there. They have already launched last year, so not even this year, last year, their digital currency electronic payment token. So they are out there. They've already given it to their citizens, to a select number of them, and they're running trials. They've also set up a partnership with SWIFT. And so China is very serious and is leading the way. And other central banks are doing the same thing. The EU, the Fed, they're all studying it and taking it very seriously. And you might ask why. If we're already 90% digitized in our money today, why would central banks care about cryptocurrency or their own digital currency? The idea is really that this may give them new monetary tools. So if we can program our money, if we can put technology into our money, it may give them, one, more visibility of what's happening in the economy and potentially more control. So, if you're in China and you want to make sure that no transactions are flowing outside your borders without you understanding what they are, if more and more of your currency is digitized, you will have a record, you will understand exactly where it's going. And I would say that presents really the tension for central banks like the Fed. There's an inclusive element to all this. Inclusive meaning the Fed can go straight to consumers. You don't have to go through financial institutions. So if there's an unbanked population, you can reach them directly. But that ultimately is in tension with this idea of how much top-down control do we really want the Fed having in the economy? Do we want them having even more visibility and even more control than they already have? And so that's the debate. Dana is going to talk about this more in her section as well. Next slide. And let's talk quickly, and I'll turn it over back to Mike after this. Where could we go? I think there are a few background conditions that are highly likely. One, this idea of money having technology built into it, I think is here to stay. This idea that my money is something more than just a simple file in a database somewhere, that it can be programmable, that there can be smart contracts. This is something that, the innovation's there. I don't think they're going backwards on that. There will be clear winners that emerge in crypto. Bitcoin now, and Bitcoin has been, truly 60+% of the market, since it's really started trading. But what about later? It's not clear now that the first mover necessarily will be the final, but there will emerge clear winners. And then fiat currency, which is the government currencies, they're likely to become tokenized and programmable as these central banks start to understand the power that they could potentially have with these solutions. Next slide. And then last for me, let's just think about some potential scenarios. Nothing genius here at all, but I've ordered them a little from most to least likely. The first scenario is crypto are important, but they're niche. And I would say that that's essentially the continuation of the status quo. They're important. Why? Because they're valuable hedges. They prove themselves to be valuable hedges, but they're still a niche means of payment, meaning transacting in the real economy is still not something they do well. And you can imagine this hedge versus means of payment in some ways are two competing aims. Now, in order for this scenario to maintain itself, they must prove durable over time. And we shouldn't underestimate how challenging that can be to remain durable. Think about, what do we think money is going to look like in 20 years? And are we sure that Bitcoin in its current iteration is what we're going to want in 20 years? It's unleashed this innovation, but innovation can also, kill the initial products. Secondly, you can imagine a scenario where cryptos gain wider acceptance. So we all collectively decide to use them, and we like them more, and we transact more than we do in our fiat currencies, and they ultimately become a threat to monetary policy. And if that's true, I think ultimately the sovereigns will regulate and will crowd out this type of cryptocurrency. Look, the sovereigns cannot allow, U.S., EU cannot allow a currency to impede their ability to implement their own monetary policy. And if they do, so I think ultimately there is a ceiling in this scenario. Scenario number 2, there's a ceiling to how far cryptos can go. And then lastly, let's think about the unlimited scenario, whereas cryptos overtake the sovereign currencies. So Bitcoin becomes a reserve currency. I think that's a brave new world. That would be a world where essentially you would not have the ability to implement any effective monetary policy. And we have to ask ourselves whether that type of world would even be desirable to live in. And so those are some paths forward to help you think about what might happen. And with that, Mike, I'll turn it over back to you.
Brad, we just saw the Chandler put on the crypto market, because the worst case scenario is status quo. So,
it said it was challenging
under Bitcoin, people. No, I know you didn't mean that, but very interesting presentation. Thanks for setting a foundation for us to kind of work off, Brad. I'm sure we're gonna have some great questions coming up here in a few minutes, and I think now we want to bring on our next guest, Dana Peterson. Dana is a UW Master's Econ graduate, and she's the chief economist and center leader of the Economy Strategy and Finance Group at the Conference Board. For those who don't know, the Conference Board is a 501c3 nonprofit business membership and research organization, and they do a lot of economic and business management research. Very important organization. They put out a lot of their own statistics about how the economy is doing, and This is a really important job, being chief economist there. Dana analyzes global economic themes having direct financial market implications, including monetary policy, fiscal and trade policies, debt, taxation, environmental, ESG, investing policies, and demographics, to name a few. Her research on interest rates, equities, credit, foreign exchange, commodities, politics has been featured many times by U.S. and international print and broadcast news outlets. Previously, she worked for Citibank as North America economist and global economist, and prior to that, spent some time at the Federal Reserve Board in Washington, D.C. Prior to coming to UW, she got her economics undergraduate degree at Wesleyan. And Dana, thanks for taking time out of your schedule to join us. I know you do many media appearances. We're very fortunate to have you on our show talking about the future of money, and I am really excited to hear your thoughts.
Thank you, Mike. It's really great being here. Thank you for the invitation. I figured I'd talk a little bit about how the business community sees digital currencies, blockchain, and whether or not there's going to be widespread adoption. So first I'll talk about the fact that, yes, there is a lot of interest in the business community in the technology. Some industries have already adopted it, some industries are looking into it, but certainly when you look at blockchain, it's a distributed secure database, whose core properties like immutability, security, and real-time tracking are really great for supply chain management. So for example, in the retail sector, it's used to track cargo and produce. It also provides a lot of transparency for opaque supply chains, like, for example, commodities or precious stones, where it's not always clear what the origins are. So it definitely helps a company to understand soup to nuts, from source to buyer, how these products are being produced. And also we're seeing more online retailers accepting cryptocurrencies as a valid method of payment. What's interesting is when we look at the charitable services segment, a blockchain is actually being used to help create digital identity programs for refugees, and also documentation for the delivery of humanitarian aid. Meanwhile, governments and supernatural entities are using blockchain to create avenues for voter registration and also voter identity programs. Central banks are, as was mentioned, are exploring the creation of their own digital currencies that would substitute for money, but it would actually be backed via governments and regulation, similar to fiat money. Clearly, when you look at the banking sector, there's a ton of interest in blockchain technology and also for secure financial transactions, especially across borders. Financial firms are using these DLT systems already to deliver syndicated loans, clearing and settlement, trade finance, and also identity verification. For example, know your customer. So meanwhile, smart contracts that Brad already mentioned may facilitate B2B industries by allowing them to engage in transactions seamlessly without the use of traditional legal services. Meanwhile, blockchain is clearly becoming ubiquitous in the world of cybersecurity. That's especially for sensitive products like mobile wallets. DLT allows for powerful encryption that allows firms to protect data, confidentiality, and also access control. We're also seeing initial coin offerings, or what's known as ICOs, raising money for startups, and that's really rivaling the traditional venture and angel capital industries. Meanwhile, going back to charitable organizations, they are accepting cryptocurrencies, certainly from those cryptocurrency billionaires. But blockchain technology is also being used to actually track the activity of the charitable organizations, making sure that the dollars that they're receiving are actually being put towards the committed goals. As Brad mentioned, most recently, people, like in the last few months, people have been investing in non-fungible tokens, or NFTs. NFTs are digital assets that use the technology behind cryptocurrencies to create unique tokens. But these tokens are being used as kind of a digital deed, if you will, for original editions of art, online art, music, tickets to events, and even memes. For example, there's a there's like a one meme where there's a cat in front of a rainbow and the cat's body is shaped like a Pop-Tart. I don't know. I don't know what that means, but for example, an NFT has been applied to that. This really has immense potential for allowing artists to create value for intangible property, and also a new way for auction houses to sell content. And potentially, you could even see a market where people can buy shares of, or buy and sell digital shares of these NFTs. So, for example, you could own a piece of the Mona Lisa. The problem is that the copyright still belongs to the original owner. And in the sense of something like the Mona Lisa, I mean, there's only one of it. But if you could somehow securitize it and people could own bits and pieces of it, that's really an interesting prospect. So I think, for businesses, there are endless possibilities for how blockchain and cryptocurrencies can be used. However, there are definitely challenges, as Brad mentioned, in terms of adoption of digital currencies. Governments right now are trying to figure out how to regulate cryptocurrencies to ensure that the platforms don't violate securities laws, that transactions using blockchain or cryptocurrencies are properly taxed. So until the tax and regulatory environment becomes more established, especially internationally, firms may be cautious about adopting these digital currencies and also the technology backing them. Also, there's the fact that some of the digital currencies are extremely difficult to obtain. As Brad mentioned, I mean, if you have internet, sure, but you also have to have money to buy a big warehouse full of computers to actually mine some of these currencies. They're also not widely accepted as a means of payment, unlike cash or cash substitutes like credit cards. And even when you think about PayPal or Venmo or Zelle and Cash App, all of those are still backed by an account that is linked to cash, right? So they're not operating in their own environment, whereas a cryptocurrency would. So indeed, these cryptocurrencies may be widening the digital divide between rich and poor countries and wealthy and less wealthy individuals. So I think until the larger population has access to these currencies, businesses may not fully adopt them. Another concern that I think is worth talking about is that cryptocurrencies are not redeemable for cash or currency that's backed by a government or a central bank. They only have value in their closed system. Moreover, these cryptocurrencies and blockchain technology have been used to finance illicit activities, including money laundering and trafficking in drugs, illegal goods, and even in people, unfortunately. So central banks, as Brad mentioned already, are looking at ways to roll out their own cryptocurrencies. The Bank for International Settlements actually did a survey of 65 central banks, and 86% of them said that they were looking at some way to adopt digital currencies, maybe doing research or a proof of concept, or some kind of pilot was in development. Just to put a finer point on things of what Brad already talked about, central bank digital currencies would have the same technology as private cryptocurrencies, allowing for instant payments, faster settlements, and also lower transaction costs. And that's especially for cross-border payments. They could also be a means of ensuring financial inclusion, as Brad mentioned, helping the unbanked. But in contrast to private cryptocurrencies, central bank digital currencies would be centralized, and every unit of digital currency would have the same value as one unit of cash, right? So behaving more like cash as opposed to something that can vary in terms of its value very widely from day to day. And also, I think most importantly is that these would be backed by a central bank, as well as having a cash equivalent. And I think, once you have broader access to it, broader usage, and you have the regulatory environment, proper taxation, safety concerns, and also some mingling of central banking, I think at that point you'll have more businesses adopting cryptocurrencies as a form of cash or a form of currency.
Dana, thank you for that quick overview of many of the subtle issues surrounding the usefulness of this. I'm going to bring Brad back in, and I'm going to start on some questions here. And I noticed in the chat, the comments that Eric Johnson had a lot of questions that kind of resonated with me. You know, I guess in the old days, we thought Warren Buffett was a good investor. And I know Buffett always said you should never invest in anything that you don't understand. So I'm kind of curious, like, how many people do you think really understand at a fundamental level the details of these cryptocurrencies as an asset class? And then, you know, you teach valuation, Brad. This doesn't function as a medium of exchange very well right now. It doesn't seem to be like a reliable store of value, although the problems with it being a store of value have been good problems. It's gone up a lot, right? I get that. But how would you think about the fundamental value of these things as an asset? So I'll throw it to you first, Brad, to talk about that. And then I'd be curious what Dana thinks as well.
Yeah, so I've thought a lot about both of those questions. You know, we started our class because I think in general, most people don't understand cryptocurrencies and how they work. And so what we did with our class, we said, all right, let's slow down and study the fundamentals. Let's read the white paper. Let's understand the difference between Ethereum and Bitcoin. And let's understand what exactly is this Bitcoin, what is it exactly, to make sure that we understand. And I would say, you know, that's a learning process. That's hard. There are, you know, there are hurdles to understanding. There's a lot of things you need to master, from computer science to economics to law, and it really is difficult. So I'd say in general, I don't think many people do understand it. Now, Bitcoin does have, you know, really strong enthusiasts, and Ethereum as well, that deeply understand these issues. So there are people out there that definitely do. And then in terms of fundamental valuation, you know, we tried in my class to think about how do you fundamentally value this, but there are a couple things. There is no interest. So you think about, all right, let's think about, what is this like? Is it like a bond? Well, there's no interest. Is it like a stock? Well, there's no cash flow. What is it? And so my view, and the view that we've come to in my class, is like, look, this is an asset that can be traded. You can trade it, but you can't really value it. Meaning, I can't tell you it has an intrinsic value based on these cash flows, and that intrinsic value is approximately X. I can't tell you that at all. What I can tell you is, if you buy it today, perhaps someone will buy it in the future for a price that's higher than that. And so those are my thoughts.
Dana, anything to add to that, or?
Well, I mean, I agree with everything Brad said. And I think certainly one challenge with adoption is the fact that it's not really valued against anything that most people are used to, right? And I think that, you know, certainly if you're a business, you'd have to have an account set up to trade in these cryptocurrencies. And so the entry point is just so high that many businesses are just not going to be able to get there. So, and plus when you look at Bitcoin, you know, one moment it's one valuation, and then several days later, it's something, a multiple of that. So potentially most people will look at that as inflation, right? So it would be very difficult to transact in it. So I think, yes, there's a ton of potential, but there are a lot of hurdles that still must be, I guess, mounted and surpassed in order to see broad adoption of these cryptocurrencies.
Yeah, I worry about the specter of you know, central bank interests hanging over the market as well. I mean, it does seem at some level like it could be the classic greater fool theory, which is, you know, a pejorative way of describing what you just said, Brad. I mean, yeah, you can sell it to somebody else, but, you know, there really isn't a way to set the fundamental value, which makes me nervous. Tim Yo has a really interesting question. In the first part of it, I think we've already covered, but he wonders, you know, how viable is this as a currency hedge, and is it immune to money market manipulations? And I think there's a couple things that I thought about tonight while you were describing this, which is, who's the Wizard of Oz behind this thing, and how do, you know, how much money are people making by creating these coins in the first place, and are people that are behind the cryptocurrency somehow really profiting from this because they understand things maybe that others don't, or were late to understanding? And then, as a currency hedge, what are we hedging against? I mean, there hasn't been much inflation, but on the other hand, I could make a case central banks have behaved rather unusually in recent years in terms of their balance sheet expansion. So maybe there is something to hedge against, but because they're all doing it in concert, we don't really see any of the normal consequences of that. So what do you think about these cryptocurrencies as a fiat currency hedge, and are they immune to manipulation? And maybe I'll start with you on this one, Dana, just to mix it up so that we each share in our answers.
Well, I guess just thinking about central banks, you said that central banks have been acting unusually, and it's basically because we've been in very unusual times. We had a financial crisis that was global in nature, and it was started within the housing market. So it started on Main Street. Wall Street took it up, securitized it, sold it to the world, and then it all came back to haunt us, right? So the central bank, once they cut interest rates, what else were they supposed to do? So they had to adopt new tools and different tools. And then fast forward, 12 years later, or however many years it's been, you have the pandemic. Again, you cut interest rates to zero. And in some cases, you have negative interest rates, minus 25 to 50 basis points. But then what do you do after that? You run out of tools. So central banks have once again used balance sheets and large-scale asset purchases using their balance sheets. So I guess if you're looking at all this, it may seem unusual and scary, and perhaps kind of sequestering yourself into a closed system where you don't have central bank influence seems attractive. But I think that, it's an imperfect measure. And certainly, if you're within that closed system, there should still be inflation, there could still be volatility. And those are things that you're going to face with fiat money. So it's not necessarily, a cure-all for all the complications and that we may see with fiat money and with central banks involved.
Brad, what are your thoughts on that? And is there any chance of insider benefit or manipulation, or are these things just too public and, the creators of this didn't actually get rich on it?
Yeah, look, the one thing I think that should be clear is that, the creator of Bitcoin, did not try to profit from this, and is not, as far as we know, not even utilizing any of the Bitcoin that he had in the very beginning, he or she had in the very beginning.
Do we know who created it?
Well, there's a pseudonym, the famous story, right? As a nice origin story of the pseudonym of Satoshi Nakamoto, who again was clearly influenced by cyberpunks and their philosophy. May have been one, two group of people, we don't really know. But one thing I say is certainly if you look at there's certainly a large number of huge call it whale accounts in each of these cryptocurrencies. So huge number, a concentration of ownership in a number of these cryptocurrencies that make, that have really, have Gini coefficients that make, they often compare to, developing countries. But the thing that's happening in Bitcoin that has been noticed by a lot of people is that many of the Bitcoin enthusiasts refuse to sell. And so there's often this idea that there's a buyer there and there's very little willingness to give up one of those. As you can imagine, an asset that it has value and it's scarce, and that every year, every time that goes by, there's sort of a scarcity value to it. It encourages people to kind of hold on to that. And so definitely one of the things that we see is maybe not as much liquidity kind of going back and forth as you would expect in a normal currency, when a lot of these major accounts are maybe holding on to their Bitcoin and other Ethereum more than what you might expect.
Very interesting. So it may be anonymous on the blockchain who owns things, but the enthusiasts may know who they are because there's a small number of really big players. That's interesting. That doesn't always bode well for the others in the market, let's just say.
Right.
Art Pratt asked the question about the consumption of electricity and the environmental impact of cryptocurrencies. So I've read stories about the mining and, just the massive amounts of computer power required. Any information you can share about that? Are these actually environmentally pretty harmful compared to, let's say, fiat currency? I mean, the Fed does have a lot of buildings and people, I guess, working,
Yeah, I mean, so the mining, especially in Bitcoin, so it's not as much in Ethereum, it's intentionally computationally difficult. And that's part of the system. That's part of the essence of the system, is that these miners have to compete inside and solve these really complicated cryptographic puzzles. Once they do, they get to mine and mint a new Bitcoin. So the trusting nature of these algorithms require this so-called proof of work that they do, and that takes a lot of energy. So the negative, big negative to Bitcoin is the amount of energy that is required for those computers as they're competing for mining rewards, and it's significant. It is very hard. I would say that the proof of work that's very hard is not the only way to do the mining. So you see proof of stake and other things that can be a lot less energy intensive, but it is true that Bitcoin uses a ton of energy, and that if you're thinking as an ESG investor, you would be very very upset by what's happening.
Dana, do you concur with that? Is that one of the harmful side effects of this?
Sure, but I mean, if you think about fiat money, most transactions are digital, right? So there's still a computer somewhere running to move money around the world and to secure and engage in these transactions. So, I mean, on the surface, yes, you can say that it's not very environmentally friendly, but arguably you could say, well, maybe we should all just go back to cash, right? And not have any electronic money. But how many people are going to pull all their money out of a bank, right, and keep it under a pillow? How many people are going to, figure out ways to internationally exchange money, big, suitcases full of cash? I mean, you're probably going to use up even more energy hopping on that plane. It's just not feasible.
Yeah. I mean, I guess the transactions are present in both types of currency, but the mining is particularly intensive in computer power, whereas the Fed can just, create some new money and
yeah, but that takes resources as well, right? So where you need metals, you need paper, so you're cutting down trees. I mean, I think, either way, you're going to be using up energy. Okay. So in that sense, once, let's say that central banks are able to establish their own cryptocurrencies, there's no mining involved. So in that sense, that's probably the purest and best way to have an environmentally friendly method of creating currency and also having it being transmitted around the world.
Right. Yeah. So a digital currency created by a central bank might, that would certainly save some energy consumption. Gary Golden has a question for Dana. What steps might governments take in the future? And he gave as examples access to wallets or exchanges. So I'm not exactly sure how to interpret that, but just generally, what do you think governments will do in the future? China's obviously running an experiment with digital currency now. Do you think we'll see digital currency introduced in the US monetary system within the next decade?
I think it's possible. The Fed is definitely looking at it. And they're concerned about the unbanked. So all the people who don't have access to traditional financing, right? So and even people that may have a bank in their community, they may not use that bank because it's much more expensive relative to using alternative forms of financial intermediaries such as check cashing places, et cetera. So I think it's certainly something that can be used to democratize banking and financial transactions. So I definitely think that we can potentially see something in the next decade from the Fed.
You know, one of the things that the United States has benefited from enormously as a country is being at the center of the global monetary system. You know, our currency is the reserve asset for many other central banks around the world, and you know, it's kind of given the U.S. a bit of a unique free lunch. You know, I think a lot of the accumulation of
exorbitant privilege.
yeah, a lot of our accumulation of current account imbalances over the years is really just other countries needing to hold our assets, and as a result, they have to give up goods and services to us along the way to do that. So would a shift to digital currencies somehow put at risk this unique position the United States has enjoyed? Is that one of the things you think central bankers should be worried about?
Dana, I'll let you take that one.
Sure. I think what central banks are worried about is not having, as Brad mentioned, controls and the ability to provide liquidity and access to credit during a crisis, right? So that's you know, people beat up central banks, but they play a very important role in making sure that the global economic system doesn't collapse. So, for example, going back to the great financial crisis, I was working at Citigroup. It actually didn't tell me when I was working there for fear of what they might say. But people would say, well, I don't understand why we bailed out the banks. And I said, well, whenever you go to the ATM machine and you put in your debit card, you expect money to come out, don't you? They say, yes, absolutely. I said, well, there's an entire industry behind that. And you have the central bank system supporting that industry. So without all those things, the entire global economy would collapse. And so I think it's so important to have central banks to have their finger on the pulse, because if they don't, and everything is operating in this system that's you know, kind of divorced from the global economy, and also everyone doesn't have access, what do you do during the time of a crisis? Would you then have central banks bail out cryptocurrencies, right? And there would be no obligation for them to do so, right? But that would just become another form of macro potential, monetary policy toolkit, right? So, you know,
Yep.
It was the case that the Fed bought mortgages, but they had to, and so they did.
Interesting.
Yeah, and I would say certainly that with China, one of their initiatives is to try to internationalize the renminbi, right? So they're trying to, you know, set up protocols and set up ways to interact with the developing world, with other partners through their digital currency, and so that is a way to potentially try to get more, you know, to try to help their currency internationalize a little bit more than it is now.
I'm going to be a politician here for a second. James Rottenberg asked the question, will the university accept tuition payment in cryptocurrency? I'm going to answer the question I wanted to be asked, which is, will the foundation accept cryptocurrency as a gift? And the answer is yes. I will tell you, we accepted a gift 2 years ago in Ethereum, and I think it took us a month to liquidate the position because we could only sell little amounts at a time without kind of moving the price too much, or, you know, finding a buyer. As you were saying, weren't many people willing to sell at that time. And, you know, it was a very generous gift, but not, you know, I wouldn't have said, you know, like a huge gift. And it was surprising, you know, the way we had to parse it out to sell it. I mean, it worked great, and we're happy to take more. So Beeple, if you're watching tonight, we are open for business. Our gift came in Ethereum. I know that's what you got. So question from Karen Thiele. What are the potential tax implications of cryptocurrency? Oh, and James, I don't think the university will take cryptocurrency. It's a state agency. They may be a late adopter on that. Anyway, Karen Thiele wonders, what are the potential tax implications of cryptocurrency for both businesses and individuals? For example, do I have to pay taxes on gains in my Bitcoin that I own?
Yeah, so this is a
Go ahead.
really tough topic. So it's painful. So the IRS, at least in the United States, the IRS classifies cryptocurrencies as property, so a little bit different than you would in your stock. And so anytime you buy then sell, there's immediate tax implications. So if you're constantly in your Coinbase account trading, every transaction has to be reported and will end up in a capital gain or a capital loss, which is a really onerous system. That's tax time for people who do crypto, who trade in crypto actively, is always a very painful time of the year.
Eric Johnson asked another question earlier that I'm just going to put out there. And I think Eric's portfolio is bigger than mine, I'll just say, but what share of my portfolio should I have in crypto? And I would just append to that, like, what role should I think about crypto even playing in my portfolio as an asset class? Or what would you say about that, Brad?
I try not to give investment advice. It's not you don't want my investment advice, but there are a couple things you need to ask yourself. First, is this an asset? Do you believe that is going to be a hedge? You need to, for yourself, you need to answer that question for yourself. You need to decide, is this a real asset class? Is it not? Is it something that's going to be a hedge or not? What I've seen others do is to take, if you do believe it is a hedge, and maybe you think of gold as being a nice hedge in your portfolio. I see people think about, all right, if I have a position of gold in my portfolio, maybe I'll half that and put some of the cryptocurrency in there as well, if I believe that it will, in fact, be a hedge. And so, what we definitely say is nothing more than you're willing to lose immediately. So you can put it in, and 1 second later, it's gone. So make sure it's a small piece of your portfolio if you have a really diverse. Obviously, you want a diversified portfolio.
We have a question here that I'll admit I don't entirely understand, but it's, where are we currently in the S curve of Bitcoin? And maybe the S curve is something you all would know about, adoption rates maybe, or
Yeah, so I would say it's hard to know. Obviously, we have no idea. It feels like we are on one of the inflection points kind of coming up. And so I would say we know the early adopters, we know the enthusiasts, we know the people that are going to promote Bitcoin as much as possible. They're in. And now it's slowly working its way up to those other, the people that follow the early adopters. I think we're still pretty early on that curve.
Dana, is this going to get enough traction with the business community that it'll be an S curve, or will someday we figure out it was an 8 and we're just going to end up where we started at the bottom?
Well, I mean, I think there is an S curve here. Again, the technology is very new. Not many people understand it. They don't really know how to tap into it. But certainly, we are seeing adoption of the technology behind cryptocurrencies as well as cryptocurrencies. And I think that, again, once you have the guardrails in place, and also it's the point of entry is easier, then you will see greater adoption.
Great. Well, I know we're getting up to the top of the hour. You guys have carried a great conversation for our audience. I guess I'd just give you each, a chance to add any final thoughts you want to leave the audience with about cryptocurrency, and I'll go in the order we went tonight. So Brad, if there's anything you want to leave people with, and Dana as well, final thoughts.
Yeah, I would just say 2 things. One is appreciate the innovation that's happened from the cryptocurrencies. So this is, a really marvelous thing for us to have and to think about, and the experimentation is wonderful. And secondly, continue to lean in and learn all you can. There's this world is really complex. It's very hard. But continue to learn more, because I do believe, like I said before, that collectively we're going to have to decide what we do and how far these cryptocurrencies are going to go in our lives.
And Dana.
Sure. I mean, I definitely have to agree with Brad on these points. I think that, for all practical purposes, right now they're not as popular as they could be. But I think, again, once you set up the regulatory guidelines, central banks are comfortable with it or have their own version that's readily accessible to the broad population, that we can see much greater adoption.
Great. Well, I really want to thank you both for taking the time to educate me and our listening audience on some of the basics of cryptocurrency. It's, I will admit, I find it a bit mysterious, and that lack of fundamental value is a bit baffling to me. I don't know that it's going to come into common use in transactions, but maybe there'll be other ways it has value. And obviously there's a lot of value out there right now, I guess well over $1 trillion. So we'll see where that all gets used eventually. But thank you both for being here. It's great to have you on our program, and I hope we can do this again, maybe a year down the road and see where we're at with the S curve.
That was great. Thanks, Mike.
Excellent. Thank you for the invitation.
Thank you. Well, very exciting space, cryptocurrency, and I think this idea that innovation is important, it's good for banks to have competition, I think, for central banks to have competition, because I think, people do worry about the future value of the currency, especially with all that's going on in the great financial crisis and now the pandemic. So maybe it's a way that banks are kept honest, and, innovation is a powerful thing. And certainly touchless payments and digital currencies could be a real boon to society and make transactions easier and better. So very exciting. I hope you enjoyed the program tonight. And we are going to take next week off. It's not really spring break, but we're going to do some spring cleaning and planning for future shows down the road. But I hope you'll join us 2 weeks from now when we'll be back. Great to see you all this evening. I know we had a lively audience, and as always, on Wisconsin.
Lights.
The job of the university is to serve, to prepare young people for the future.
Students learn that they are responsible for the welfare of their university. The good life doesn't just happen by itself. Somebody works at it. But it's fun when you do it together. Students from small Wisconsin towns with students from all over the world, brought together to share the interests, the loyalties of a single university family.